Hi traders, welcome to another weekly Forex forecast on FX list, which is for 26th to 30th of October year 2020. In this week, I'm going to share with you some lists of currency pairs I have on my watch list next coming week should in case of trade breakout opportunity. And then if today's your first time viewing my YouTube channel, do not forget to click on the subscribe button as well. Hit on the notification bell so whenever I release additional content of this kind, you're gonna be the first to be notified. Also, remember, forex trading is an high risk investment as well and high rewarding investment. Therefore, do not trade more than the amount of money you cannot afford to lose, and then do not trade with a borrowed money. Here are the list of currency pairs I am watching out for next coming week. I have the British pound sterling paired against the USD. I have the euro paired against the USD. I have the USD paired against the Japanese yen. I have the Australian dollar paired against the USD. As well, I have the cryptocurrency market, that is a Bitcoin and then Ethereum. So let's dive into the weekly Forex forecast right now. Here comes the first currency pairs on our watch list, and then there is the British pound sterling paired against the USD. Right from the swing lower low of this currency pairs right here, we can see the strong bullish rally to the high swings right here before price made a bearish wave. And then since then, these currency pairs have been in a state of consolidation medium. And then last week, we can see how price did ensure a strong bullish breakout above the key level structure, which acts at the price level of the 1.30029, which serves as a resistance structure right here, and then as a support right here. And then we can see last Thursday bar and the Friday bar, the bears tried to ensure a close back into this key level structure, but Friday bar failed. So as long the bears are still pulling price to this key level structure right there, it's a signal and indication of bullish weakness. So next week, pay a close attention to the key level structure of the 1.30029 to see how price is going to react to this key level structure. Next week, failure for the bulls to defend the key level structure of the price level of the 1.30029, then don't be surprised. The bears has a high probability to pull price downwards to the trend line structure right here, which actually acted as a high-low swings rejection right here, and then a high-low swings rejection right here as well from the swing lower low right here. That was the midpoint of May and the June 2020. Alternatively, if the bulls should steps in, that is on Monday or maybe Tuesday next week, whereby they definitely ensure a strong bullish aggressive bar right here, then it's a signal the bulls are willing to retest the next key level resistance structure, which acts at the price level of the 1.3265x, which was a resistance structure right there. So next week on the British pound sterling paired against the USD, pay close attention to the key level structure of the 1.30029. As well, when making your technical decision next coming week, don't forget about the fundamental factors. That is the US election, that is November 3rd. This has high probability to affect the market fundamentally. The next currency pairs on our watch list is the euro paired against the USD. Right from the triangular bottom right here, we can see the bullish rally, and then from the bullish flag right here, we can figure out the continuation of a bullish rally. We can tag this as a rising bullish flag. So let's zoom in on these currency pairs. We can see the transformation of price through this rising flag. You can see that. You can see the high-low swings right here before price broke out. And the price made a retest the first time right here. Here comes the second retest right here. Therefore, this channel right here, the dynamic trend line right here, it's a very powerful dynamic structure we have to pay close attention to next week. We can see how it held Friday and the Thursday and the Wednesday bar right here, whereby the bulls failed to ensure a daily close above this dynamic structure right there. We can see how it acted as a resistance structure for price right here, resistance structure right here, and then support structure right here, is support right here, is support for price right here, is support right here, is support right here. For as long this dynamic structure right here is still holding up price right here, then we have to pay close attention to this dynamic structure next coming week. If the bulls should ensure a daily close above this dynamic structure next week, I mean a strong decisive bullish bar above this key level structure, dynamic structure next week, then it's a signal the bulls are willing to resume the bullish upward rally on these currency pairs. And then don't be surprised if the bulls re-expose the next key level structure, which acts at the price level of the 1.19621 in order to aim higher for a more bullish aggressive rally on the euro pair against the USD. Alternatively, next week, if the bears should step in whereby they put price downward, they still need to clear off the key level support, which acts at the price level of the 1.17122, which was a support structure right there, a support right there, likewise a series of supports right there. So next week, we need to pay close attention to the dynamic structure of the bullish rising channel right here to see how price react to the dynamic trend line right here. Maybe it's gonna be a bullish continuation rally or a bearish rejection for a more bearish downward rally on the euro pair against the USD. The next currency pairs on our watch list is the USD pair against the Japanese yen. I have been emphasizing on these currency pairs for a long period of time right now, and then we can see based on the daily chart frame, price broke out of a symmetrical triangle, whereas the highs right here, the low highs, we can see the lower low right here and the high low. Price broke out at this medium right here. Price made a retest of this symmetrical triangle, as well a key level structure acts at this level, which was the key level structure of the 106.070, which was a confluence point. Price made a retest for a bearish rally. So what are we looking out for on this currency pairs next coming week? As a price action trader, we need to pay a close attention to the key level support, which acts at the price level of the 104.167. Price is actually approaching this key level structure. As well, pay close attention to the minor key level structure, which I constructed right here. So in order for you to see it properly, let's zoom in on this currency pairs. Zooming in on this currency pairs, we can see we got a strong bearish breakout of this minor key level structure right here. And then there's something I want to show you guys based on the higher time frame, because I am looking on the bigger image on this currency pair, so I can take advantage of a long-term investment plan on this currency pairs. So let's check on the monthly time frame. Here comes the monthly chart frame of the USD pair against the Japanese yen. So trader, what can you see on this chart frame? Well, I can figure out a symmetrical triangle based on the monthly chart frame. So this is why I am looking out for a long-term investment plan on this currency pairs. So let's zoom in on this currency pair so we can figure out the price action properly. Zoom in right now, we can see price is actually at the apex of this symmetrical triangle right here. So what I'm looking out for is we need to ensure a monthly close below this dynamic structure right there and the key level structure, which acts at the price level of the 104.167 before we can anticipate for a long-term bearish rally on the currency pairs of the USD pair against the Japanese yen. So there is still a week to go in the month of October. So let's see how the month of October is gonna actually come to an end. Maybe it's gonna be a bearish close, or maybe price is gonna continue in this symmetrical triangle like we did have in the month of September and then August. My personal suggestion is, as a trader, wait for a monthly close out of this pattern to figure out maybe it's gonna be a bearish rally. Before we can figure out a bearish rally, we need to figure out a bearish close of monthly bar below this dynamic structure and the key level structure. Alternatively, the bulls can still put price upward, whereby this currency pairs continue still in the state of range within this pattern. To summarize this currency pairs on the daily time frame, don't be surprised next week if this actually serves as a double bottom to put price upward for a bullish rally to retest the previous key level structure. That is a price level of the 106.070, which was a resistance structure right here. Likewise right here as a support right there. Alternatively, next week, if the bears should step in whereby they put price downward and then ensure a daily close below this price level of the 104.167, then it's a signal the bears are willing to put price more bearish downward. The next currency pairs on our watch list is the Australian dollar paired against the USD. Right from the swing low of this currency pairs right here, we had an aggressive bullish rally. We had a rising channel right here before price broke out at this medium. So let's zoom in on this currency pair. We can see right from the breakout of the bearish bar right here, we got a bearish move, and then price made a pullback, and then we can see this key level structure right here, which I constructed a horizontal minor key level structure, which acts at the price level of the 0.72500, was actually a resistance structure right here, and a right here a resistance structure. The reason why I didn't represent this key level structure right here with a red horizontal line, I mean a major key level structure, is simply because we have no price penetrating through this medium right here, likewise right here, and then likewise right here. So this is the reason why I represent it right here with a minor key level structure, which means it does have no high tendency to serve as a point of rejection for the bulls, like it is acted right here as a resistance structure. So the pattern we can figure out right here is a double bottom formation. The pattern right here has high probability to lead into a double bottom. We can see this key level structure, which acts at the price level of the 0.70262, was a support right here, a support right here, likewise right here, resistance structure right here, and a resistance swings for the price right here. So next week, pay close attention to this minor key level structure right here. If the bulls should put price to this key level structure whereby they fail to ensure a daily close above this minor key level structure right here, then it has a high probability to interest the sellers to put price downward again, and then this could set this currency pairs in a state of consolidation. And then if the bears should successfully get in right here, whereby they put price downward and then the bulls fail to defend this key level structure of the 0.70262, then don't be surprised. This is gradually turning into what? A low high swings for a more bearish downward rally. So next week, pay close attention to the Australian dollar paired against the USD. Maybe the bulls are going to put price upward and then be going to be successful to put price above this minor key level structure of the 0.72500 in order to aim higher for the next key level resistance, which acts at the price level of the 0.73719, which was a resistance for the highest swings of this currency pairs. And then maybe the pairs are going to set in and then put price downward to clear off the key level support, which acts at the price level of the 0.70262. Okay guys, it's time we wrap up our analysis with the cryptocurrency market, and then I have the Bitcoin and the Ethereum. These are the two major cryptocurrency markets which I involve, which I trade. So for most of you guys who have been asking which of the cryptocurrency I trade, the truth is there is a lot of cryptocurrency, and the more and more keeps on coming every day in the market. So you got to be very, very, very careful. Don't be deceived by the sole marketers who encourage you to invest in any cryptocurrency. Investment doesn't work that way. You need to understand why you are investing. You have to understand the investments you want to involve yourself in. Liquidity is the money. If you want to invest in any cryptocurrency market, you have to look at study the liquidity. Liquidity simply means the ability of you to turn such digital coin into money so fast. So this is why I involve my investment in only Bitcoin and then Ethereum. So for those of you asking as well, where am I gonna get in my entry, my stop level on the Bitcoin market? The truth is, I do not speculate cryptocurrency. I trade cryptocurrency based on ownership. It means I hold the cryptocurrency. It means I store digital assets in my digital wallet. Whenever price comes down, there is a pullback. I store my digital wallet, and then when the price goes higher, then I sell some of my coins to my digital wallet. So this is how I trade the cryptocurrency market. And for those of you guys who are asking me, when can you get in on the Bitcoin? Can you get in right now? Remember the rules of investment. You don't have to buy high, and then you don't have to sell low. You got to sell high, and then you got to buy low. So right now, if you want to get into the Bitcoin, then I'm gonna advise you don't have to jump high. It's better you look out for a retracement of price. If price can make a retracement, still take note, we got a key level resistance structure which acts at the price level of the 1,208.958. So you got to pay close attention to that key level structure before you get into the Bitcoin. As well, the Ethereum and the Bitcoin both move in the same trend. It means they have the same correlation. So if you are looking out to trade Ethereum as well, Ethereum is on a bullish term right now. They have the same correlation. In fact, Bitcoin and Ethereum, I see them as a twins brother. So guys, I don't want you to miss the next train of set of millionaires on the cryptocurrency market. No one knows, maybe the next movement of the Bitcoin right now. Maybe it's gonna add up to 30,000, 40,000, 50,000. No one knows. It's actually gonna add to almost 20,000 in the year 2017. You can figure out right here on the chart when Bitcoin was being traded at the price level of what? Let's check it out. The price level right here. You can see right from the price level right here. That was in 2016. That was in 322. You can see that appreciation to the price level of 19,835. You can see the huge profit right here. So don't miss the next potential bullish rally on the cryptocurrency market, especially the Bitcoin and the Ethereum. So this is why I'm sharing this with you guys. And then if I should analyze this Bitcoin based on the weekly chart frame, because I love to analyze it based on the higher time frame. So let's check on the weekly chart frame right here. Okay, I'll see based on the weekly chart frame. I'm gonna extend my chart right here. You can see right from the chart right here, I got a swing low right here. The swing low right here. We got a swing high. That is the highest peak of the Bitcoin in historical record. And then we got a swing low right here. Got a swing low right here. The swing low high right here. Swing low right here. Price broke out right here. So this was a symmetrical triangle which took years. That was right from 2017 to 2020. It took years. We can categorize this as a long-term trend on the cryptocurrency. That was a Bitcoin. So I don't want you guys to miss this next potential bullish rally on the Bitcoin. And then as well right here, figure out right here, we got a bullish wave right here. And then there's something I want to show you guys right here. I can figure out a formation which looks like an inverse head and shoulder on this current that is on the Bitcoin. Even though it's not a well-defined head and shoulder, inverse head and shoulder, you can tag this at the left shoulder right here as a head right here, and like as a right shoulder. So just to summarize, the Bitcoin right here is I can figure out technically that is a resumption of a long-term bullish trend. For the fact the pattern which Bitcoin broke out right here is based on the higher time frame. So don't be surprised if Bitcoin heads to the next 30,000, maybe 40,000, 50,000, and no one knows. Maybe it's gonna add up to 100k per BTC. So don't miss the next opportunity on the Bitcoin. As well on the Ethereum as well, the same trend right here. They are both moving in a bullish rally right here. Likewise, we can see right from the swing high of the Ethereum right here. You can see that is a price level of the 1,400, and the price now Ethereum is also jarring off for a bullish rally. Actually, I know I have a lot of Ethereum in my digital wallet. I stock a lot of Ethereum because I have a more expectation of a more bullish rally on Ethereum. For the fact, for some investors right now, Bitcoin might be too much expensive, and then people, investors might wish to diverse most of their portfolio into Ethereum, and this is why I accumulated a lot of Ethereum when the price went down. So this is based on my personal opinion. It's not intended as a financial advice, so you have to make sure you understand the risk involved in this business. So do not invest more than the amount of money you cannot afford to lose, and they do not trade with a borrowed money. So guys, this is what I have for you in this weekly Forex forecast. And then if you haven't joined my free Forex trading webinar, which I do hold 2 times in a week, Wednesday and every weekend Saturday, there's a link I left at the bottom of this video. Click on that link so you can get access to the webinar 2 times in a week. And then if you are looking out for a reliable, reputable, honest, brokerage firm to trade currencies, cryptos, I have a series of brokerage firm under this video. Click on that link so you can start trading on a reputable, reliable, trustworthy brokerage firm today. So guys, this is all I have for you. And then do not forget to subscribe to the YouTube channel as well. Hit on the notification bell so whenever I release additional content of this kind, you're not gonna miss out. So do have a wonderful weekend. Peace.